Hello and welcome to another running video. I seem to be making a lot of running videos, but hopefully motorcycle riding season will be here shortly and I'll be able to make some motorcycle riding videos as well. This one I'm recording the audio after the event because it was a bit of a windy day, although it doesn't look like it. It was a bit of a windy day and the microphone picked up a lot of background noise and so on, and so the audio that I made at the time wasn't very clear, so I thought I would record the audio later and add it to the video. It gives me the opportunity to talk about something not directly related to running. I'm going to talk about insurance today, and I'm going to talk about it for some what I hope are interesting reasons for you. You might think that's a bit of a funny topic to talk about while you're running, but I'm going to talk about it because I've read a couple of articles about it and I saw some items on the news about insurance lately, and I thought it was a good opportunity to pass on some of the things that I had heard and read about. Now, let me state from the beginning, I'm not trying to sell you insurance. I don't work for an insurance company. I don't have any interest in insurance companies at all. I'm just talking about insurance in general and some of the problems that people say the insurance industry or insurance companies are going to face and are already facing, but certainly going to continue to face in the near future, unless they find a solution to those problems or unless something drastic happens to help them find a solution to it. I suppose, first of all, it's good to think about, well, what is insurance and why do we have it? In most cases, insurance is voluntary. I can only think of, say, two cases, in Australia at least, where it's almost compulsory to have it. One of those is to do with car registration. You have to have what's called compulsory third-party insurance, or green slip as we call it in New South Wales. And you have that insurance because you can't register your car without it. And you have it because it means that if you are the person at fault in an accident, in other words, you caused the accident, then other people who might be injured in that accident as a result of your driving, their medical bills will be treated. Now, it doesn't cover repairs to cars and property. It covers only individuals, as far as I know, who might be injured as a result of an accident where you are determined to be the person at fault. And it's called compulsory third-party insurance or green slip insurance, and you have to have it when you register your car. I'll come back to other car insurance in a moment, but the other type of insurance that's almost compulsory, although you can choose not to have it, is private health insurance. And the reason for that is the government, that is the Commonwealth government, says, well, we need to reduce the demand on the public health system, and so people who can afford private health insurance should take it out so that they can get treated in private hospitals if they need to, and only the public hospital will be used for those who can't afford health insurance or for emergency cases. Now, if you're under 30 and you don't have health insurance, then it's not much of an issue. But once you get over 30, the premiums start to rise fairly drastically, and that's because the government has said we want to punish people for not having health insurance by making the premiums so expensive that they will buy it before it becomes too expensive. For most of us who might think, well, I only go to the doctor once a year and that's covered by Medicare, which is compulsory, or I only ever get glasses and go to the dentist. But you have that insurance because you think, well, maybe later on in life, if I'm get married, I might have a family, so there's a lot of expenses involved in having children, or I might have a serious illness later on and needs an operation or something or other, so I have health insurance. Now, I said I'd come back to car insurance, and there are other forms of car insurance. There is comprehensive car insurance, which people have so that if their car is damaged, if they damage their car in an accident, so you have a smash, you run into a light pole or something like that, your car is damaged, then if you have comprehensive insurance, the insurance company will pay for the repairs to your car. Of course, your premium will go up by an appropriate amount, but the policy covers the repair of your car. If you run into someone else's car, your policy or your insurance company covers the repairs to the other person's car as well. If your car is written off because it's so badly damaged that it can't be repaired, or they don't think it's safe to repair it, then you will receive a payout from the insurance company based on either the agreed value or the market value minus the GST, I believe. If you can't afford that sort of insurance, then you would have another form of insurance called third-party property damage. And third-party property damage means if you run into someone else's car or you run into someone else's house or something like that, their property, that is their car or their house, will be repaired under that policy. Your car won't, but their house or their whatever it is property of theirs that you damage will be repaired. Now that's insurance of a type, but the insurance I'm talking about is mainly to do with house and contents insurance. And in this case, we all have, those of us who can afford house and contents insurance have it for two reasons. One is because we have this thing, the house, it's an asset, and the contents, which are our treasures that we value and we think we should have them insured. And secondly, because if there is some thing that happens to our house or the contents, we don't have stacks of cash to just go out and replace the house. We can't just go down to and say, we'll just build another house. The bank won't give you money if you already owe them money. And if your house is somehow damaged and all the contents are ruined, you don't have $120,000 or $200,000, whatever it is, to replace every TV and every stick of furniture and all that sort of stuff. So you have these insurance policies as you hope you don't need them, but you have them just in case. Now, the things that I have read lately about insurance that caused me to think about this and talk about it is that I read, first of all, that insurance inflation, that is the increase in premiums, was something like 14.6%. It was claimed that part of that, about 50% of that, was to do with inflation or increased costs in the building industry, and the rest of it was to do with increased costs and losses in the insurance industry. So there was that issue. And then there was the issue of insurance companies that have been facing major payouts in the last few years. Now, if you think about Australia in the years 2021, 22, and even early of 2023, the eastern seaboard of Australia, from almost the tip of Cape York to the end of Tasmania, has been subject to some pretty severe natural disasters. First of all, there were bushfires that burnt out enormous amounts of land, and I don't know how many houses overall were lost, but lots and lots of houses were lost. Almost as soon as those fires were put out, some of those very same areas, and areas particularly in northern New South Wales and southeast Queensland, were ravaged by severe floods, and houses were inundated. What that means is that the water rose to the level where it came inside the house. That doesn't mean the river just broke its banks. It means the water from the flood or the river breaking its bank came inside people's houses, and people's houses were ruined. And in some cases, their houses were floating down the river. But in many cases, those houses were declared uninhabitable. Now, if people have insurance, of course, then the insurance company has to pay out on that loss, on the loss to their property and the loss to their possessions. So let's suppose you have a house that's worth $500,000 and you have $200,000 worth of contents. That's a $700,000 payout that the insurance company is up for. And in the cases of these floods up around the northern rivers, there were lots and lots of houses that people just lost their houses. In around Lismore, I know the New South Wales government is in a buyback scheme saying to people, we'll buy back the land that your house was on, we'll give you what we think it's worth, and you won't be able to live in that area anymore. Now, we might be inclined to say, well, we don't live in northern New South Wales, and where I live hasn't been affected by a bushfire either, so that's not my problem. That's the problem of people who live in that area. But there are two issues to consider here. First of all, insurance companies, in order to keep premiums as low as they think they can be and as low as they can make them affordable and to maintain profits, they do what's called spread the risk. So the people in the flood prone or the fire prone areas pay higher insurance premiums because they're in fire or flood affected areas, but everybody else also pays a premium that's higher than the risk might be in their area. So the insurance company, as I say, can spread the risk and therefore keep what they or do what they hope to do to keep premiums affordable. Now again, you might say, well, okay, I have to pay more for my car insurance and more for my house insurance even though I haven't made a claim, but I can still afford to do that. But what is happening now is that some insurance companies are saying to people, well, if you live in that area, we, in one of these areas that is bushfire affected or flood prone, we are now declaring those areas uninsurable. That is, we will not offer an insurance policy for your house or your contents if you live in that area. Now, again, you might be inclined to say, well, I don't live up there, so that's not my problem. there's two issues with that. One is the idea that everybody ought to be able to insure their property and ought to be able to insure their belongings and say, well, if there's a natural disaster, I ought to be able to make a claim to get those to have those things rebuilt or replaced. On an issue of fairness and equity, everybody, things ought to be fair for everybody. But the second bigger issue is, if those areas are now declared uninhabitable or uninsurable and people continue to live there, that's their choice, you might say that. But the insurance company still has to maintain profit, has to maintain dividend level to its shareholders. And in order to do that, since there are now less people buying policies, the people who are buying policies have to pay more. So when you get your renewal notice and you think, oh, my car insurance has gone up, my house insurance has gone up, contents insurance has gone up, but I haven't made any claims and there haven't been any fires yet, there haven't been any floods or whatever, it's because the insurance companies are saying to people who live in particularly vulnerable areas for fire or flood, for example on the North Coast, well, we're not going to offer insurance policies in your area anymore, but in order for us to maintain our profit and in order to us to continue to pay dividends to our shareholders, there are less people buying insurance policies, so we've got to charge them more. In this article I just read in the paper today, there was talk that it stated that in some states in California, in the United States in particular, California and Georgia, some insurance companies had just stopped offering policies. They were just not going to offer insurance policies for house and contents in those areas at all because there are so many wildfires and bushfires, there's so many tornadoes and things like that. They're just creating massive losses for us, and we're going to cut our losses and we're not going to offer insurance policies there anymore. Now, the insurance industry, or the Insurance Council, I think, which is the sort of overarching body, has looked and said, well, the science tells us that something's going on with the climate. And we can argue about that till we're blue in the face, but the science seems to be saying something's going on with the climate. Whether it's a long-term thing or just the last few years or the last decade or not, I don't know. I'm not a scientist. But certainly there are things saying to us something's going weirdly wrong with the climate. And the insurance companies are taking the view that this is a long-term thing and a continuing thing, and that the disasters that used to happen are, first of all, becoming more frequent, they are lasting longer, and they are becoming more severe. And if you think about the bushfires back in 2022 or the fires that have just happened in Hawaii, these have been horrendous events in terms of loss of property, damage to the environment, and so on. And insurance companies are saying, well, these things are going to happen more frequently, they're going to last longer, and they're going to be more severe. And so either we find a way to try and solve those issues or deal with those issues to reduce some of that problem, that is, I guess, deal with climate change somehow, or some areas are just going to be declared uninsurable and therefore potentially uninhabitable. And let's think about the possibility that, say, with rising sea levels, some areas along the northern beaches of Sydney, where king tides a little while ago destroyed people's houses and washed away swimming pools and all this sort of stuff, and seawalls had to be built and so on. Imagine if those areas were now declared uninhabitable, and all the houses that had beach frontages, and you could walk out your front door and you're on or back door and you're on the beach, now had to be told, well, you can't live there any longer. Your house is going to be demolished and you can't live there any longer. That would be a devastating blow to those people, and it would be it'd mean that all those people would have to relocate. Now, I don't have an answer to any of those things, but that's my explanation for what's happening with insurance at the moment. And if when you get your insurance bills or premium renewal notice and you think, geez, my premiums have gone up and I haven't had a smash, I haven't had a claim, my house hasn't been broken into, there hasn't been a fire in my area, nobody's stolen any of my property, but my premiums have still gone up, that's the reason. Because insurance companies are trying to cover the risk, they're trying to maintain profit levels and dividend levels, and they've been faced with these massive losses through floods and fires in the last few years, and they're trying to recoup some of that. Well, thank you for watching and listening. I hope you've enjoyed the video that's been running while you've been doing that, and I hope you've learned a little bit more about insurance.